Hey, what is going on, guys? Edward here, back with another video. And this opportunity, I want to discuss about breaker blocks. If you haven't seen my last video, my previous video which was based on order blocks, I recommend you going here at the top right corner to watch that video first, and then you jump into this one. All right, because order blocks and breaker blocks are like almost the same, but there's a few different things, and I'm going to mark them up right now, right here in the chart. So as you can see right here, we had recently have a sweep right here to the downside, sweeping liquidity from recent lows. Then after the sweep, we have a displacement to the upside. All right, we're actually having a market structure shift. Now, this actual candle right here, body of the candle closing above the market structure shift and closing above the actual breaker block. I'll show you what is happening right here, because in the same time, like by the time this candle closes, there are multiple things happening right here. So if you've seen already the order block simplified video, make sure to watch them. If you have seen them, you might know that the actual order block is right here, right? Now, the order block is the series of down close candles right here that caused the sweep. Is this series of candles, okay? The actual order block. Now, the breaker block is the up close candle before the downside move. Okay. Now, in this particular example, there's one candle only, so we're going to mark up only one candle. Now, if there are, sometimes you're going to see a series of candles instead of just one. All right. Don't worry. I'll show you once I jump into the charts. What does that look like? Now, right here, the actual order block. There's also a couple of ways you can mark this thing up. You can mark it up from just the body of the candle, or including the wick as well, right? Something like this. Basically, this is the breaker block. If you see that the wick is just too big, it doesn't matter. Like I always say this breaker block, anyways, whenever you make the entry, you're going to be making the entry at the edge, right? And the stop loss is normally going to go here. I don't want you to be placing the stop loss below the breaker block, although some people do. I've seen it actually. Some people actually place the stop loss below the breaker, but always the safest zone is right here. Okay, I don't care. Um, I don't care if the risk, if the actual stop loss looks a lot bigger. It doesn't matter, because if you're risking only 0.50% or 1% of your account in this trade, it doesn't matter. Okay, stop loss that you're risking right here, it's gonna be the same if you put it right here. Okay, doesn't matter the distance, the amount of pips, because you're gonna have to change the lot size. That's what's gonna change. So again, this is the safest zone to be placing the stop loss, and you use this breaker block as a confluence, because as I mentioned, you just don't have only the breaker block right here, but now you have an order block also, right? You have a fair value gap, which is right here. So we're using all these PD arrays in our favor, okay, to make an entry. So you see, we have on top of each other, we have an order block, we have a breaker block, we have a fair value gap. We have so many confluences right there that's going to make us actually enter with a lot of confidence. Okay. Now, again, doesn't mean because I have all these confluences, the trade will play out really well all the time, 100% of the times. Nope, that doesn't mean that. But it's a high probability trade. Okay. Now, let me jump in on the charts so we can see more examples. Alrighty, so right here, what do we have in this particular example? We have a recent sweep, price swept, recent recent lows and old lows right here. So after the sweep, if you pay close attention, look at this nice aggressive move to the downside, right? It took 1, 2, 3, 4, 5, 6 candles, around 6 candles right there to drop, right? Now, Where is our order block? Our order block is the opening price. This is the one that I'm going to mark up. This is the actual order block, right? Now, where is the actual breaker block? The breaker block is going to be this last bullish candle before the move, okay? I don't want you to mix this candle, and this candle. No, in this occasion, in this example, again, it's only one candle right here, the last bullish candle before the downside move. That's the breaker block. So this one right here would be our breaker block. Okay. Now, the cool thing about this particular setup, if you don't know, there is a setup called the unicorn, and right here we're actually having a fair value gap on top of a breaker block. Okay, this is usually known as the unicorn. So you could have entered anyways anywhere inside here. If you wanted to take the buy on the breaker block or at 50% of the fair value gap, anywhere inside here, it's a nice position to take. Now, I know, of course, you're going to have fear of missing out the position, so it's maybe better to enter right there. The stop loss, you see, even though the breaker block right there, I see some people actually placing the stop loss just below the breaker block, a few pips below the breaker block. I don't recommend doing that. Okay, what happens? Okay, so best thing to do, I don't care, is this low. Okay, that protected low. And then we can target 1 to 2, probably to the next high, which is right there, or using the Fibonacci from the low to the high using the extension, right? But that's basically it. This is known as my breaker block. Let's go ahead and see and find out another example. All right, now right here, this is your USD on a 15-minute time frame. We're seeing the price actually recently swept, okay, an old low right here, taking liquidity. And after that sweep, what time is that happening? Pay attention. This is actually happening during New York session. That's a good session, and that's a good time for this to be happening. So after the sweep, look at the displacement to the upside, right? Very aggressive move to the upside. Now, look at this. In this move, after the sweep, which is very important, after that sell side liquidity being taken, price pushes up and closes above the opening price of this candle, right? This is my order block, right? Now, my breaker block, where would it be in this case? Is it this one? Nope. In this case, remember, you see price from this fractal, from this low, price created a high and then lower low. So the actual move in this case will include 3 candles. It's actually these 3 candles. Okay. Now, sometimes you might have big weeks to the upside. It's up to you if you want to cover them all or you just want to go with the body of the candles. Okay. This like the marking up the one at the bottom would not really matter much, as I mentioned, because I am not going to be placing my stop loss below the breaker block. My stop loss will always go below here. Probably the most important zone to enter, it's maybe, this area, right? In case you have fear of missing out. What is that? Well, if this candle breaks above, let me go here. Right, so we have that break, right? Very strong push to the upside. Price, it's automatically, you see above actually this high. This is market structure shift, right? Now we have, I have shown my block, this breaker. This, by the way, is called breaker block because this was a supply zone, right? This was an order block right here. When the price was actually going to the downside, let's actually go here. So you see, this when the price was actually going to the downside, this was a demand. A supply zone. So technically, if you are an SMC trader, you'll be looking for a sell somewhere here and then looking for a continuation to the downside, right? So at this point, this was not a breaker block. This was probably a supply. You would mark it up as a supply, right? But when price does this, start disrespecting that order block, that supply, you see it's breaking above it. Now this is turning into a breaker, okay? Now that supply, it may turn into a demand. This is what we're looking for right now. So it's turning into a demand zone, right? Which there were supposed to be sellers interested right here. Now it broke above, so now it's switching into buyers. Now buyers are going to be interested to get into this area, okay? So anyways, all I care about is the entry point, which in this case is just right here. You know, if you wanted to enter, that's the entry. My stop loss is not going to be here. It has to go here, okay? It has to. Take profit. Well, you could be using your Fibonacci from the low to the high, and you could be targeting maybe this size, okay? This would have been 8122 risk to reward. That's it. So let's see what price does. Price pulls back. You see, respects the breaker block. This time price actually come deeper into the breaker and then it starts pushing. I think this trade is actually live right now, if I'm not mistaken. Yep, look at that. Oh, this one would have got us actually out on break even. Price came into the entry point. I recommend my students, like every time you're halfway up your target, taking partial profits and moving stops to break even. So probably this one was a break even trade, probably. And as I mentioned, you see we're currently, this is live. I mean, it's Saturday, but prices is still like in the direction, in the actual direction. So anyways, what matters here is you guys understand where the breaker block is. You can mark it up like that, covering the wicks or just the bodies. Okay, I don't really care right here. All I care is the opening, because that's where I'm gonna make. If I care about just the opening, that would be my entry. My stop loss would still be right here. Doesn't matter the bottom right here, because I'm not gonna be placing my stop loss below the breaker. Okay. I know you'll be getting, a better risk to reward. I don't care, but most of the times you're gonna get stopped out. So this is the safest zone to be placing your stop loss. I hope it makes sense. So let me go and look for another example right quick. All right, now this one here in our last example, pay attention. Price recently swept very strong to the downside. This liquidity. As a retail trader, you would be seeing this as a support, very strong support, right? So what price does is it goes down very strong to the downside, just making sure it's sweeping everybody right here, right? This is liquidity. Price taking you out. In this drop is building a fair value gap. That fair value gap looks like it's respecting. Now I want you to see right here what I'm seeing. You see, in this drop, price pulls back. Where, if you are an SMC trader, this drop right here, you might know that this is probably a POI, or this is a block. This is an actual order block right here. This one, before the move to the downside, kind of difficult to understand it. Some I see actually some marking up the highs, like this one right here, as the candle with more volume. That's gonna depend your interpretation. Okay, if you want to take this one in particular, I would just choose this one right here, to be honest, right? As I mentioned, some scenarios are going to be different. So I mean, no, this is not a breaker yet. This is just a supply. Okay, we have a supply zone right here. You see the price actually touched and is trying to go down. Also reacting, the body of the candle respecting very well this fair value gap. Let's see if it's going to continue going to the downside. In case, because we have a sweep, right? In case the price, it's going to reverse, or I'm trying to look for a buy, well, I would have to see the price closing above the opening price on this one. That would be my order block in this case, my bullish order block. If I want to buy, I want to see a body of the candle closing above. Okay, and we already know where is our supply, right? So this, if this order block gets broken to the upside, that's going to turn into my breaker. Okay, so let's see what happens right here. I'm going to mark up this low, like just in case price happen to sweep another low at the point at this moment. This is my lowest point right there. Let's see what we have. Price coming back up strong with a lot of momentum, and is not, look at that, is we don't have a validation just yet. Price is not breaking. Okay, as a matter of fact, from here price could actually drop really nice, but we are not having a break to the upside. Let's see what happens. Next candle. Okay, boom, there we go. That candle closing finally above this is validating my order block. So this entire, this two downside candles right here, this is my order block. And now this supply is no longer a supply. Now this is turning into a breaker. Okay. Now, again, because I don't care like this low, because if I'm trying to look for an entry, I'm not gonna be entering right here and placing my stop loss right here below the break. I don't care, this actual zone. My stop loss would still go right here. Okay, believe it or not. This also, this fair value gap that turned out to be broken right here with a strong momentum to the upside. This is turning now from a fair value gap to an inversion fair value gap. Price could actually come back down here, tap it, and go up, right? Now, where am I going to be targeting in this case? Well, you can use the fib again from the lowest point to probably here or to here. Let's see what we have. Where could our target be? So you look somewhere in between the 2 and 2.5. I'm liking that we do have this actual zone right here. That's a nice buy side liquidity. We could be targeting that zone. All right. Now that we are having that break, that one candle is telling me, okay, is disrespecting this actual zone right here, is breaking that supply that we had. Price closing above, also closing above the opening price of this one, so it's validating my order block. We have so many things. We have an order block, we have a breaker block, we have an inversion fair value gap. If you want to make another entry, for example, if you want to make another entry, you could be placing another buy limit order right there, stop loss right here, and then take profit all the way up. You know, like if you have fear of missing out, you don't want to miss the first position. Well, mark it up right there. So, anyways, let's see what's going to happen. Right? Look at that. So price tapping in. It did actually tap in the inversion fair value gap. You see. However, respecting the body of the candle never closed below the breaker block, right? Look how it actually stopped right there. This week tapped into the fair value gap. So you would have now two positions, two entries open in here. Now you're more than halfway up. You should be on break even on both positions, probably, getting them on break even, taking partial profits, and continue holding. Look at that. Okay. So going, oh, okay. Well, I did not see this low right here. This is very important as well. We actually had not just these recent lows were taken, but also old lows. This makes this an A plus setup. It makes it even better, a lot more attractive. So this is not buy side, sell side. So this is a very attractive setup, and it's an A plus and very high probability trade. So I hope it makes sense, guys. Let me know what you think about breaker blocks. If you, as I mentioned, if you haven't seen my entire video based on order blocks, again, simplified, go on the top right corner. I'm going to leave you the video there, plus another playlist based on ICT. So I hope it makes sense. Let me know what you think. Give it a big thumbs up. If you like this content, it motivates me to keep posting videos for you guys. And I will see you on the next one. Alrighty, take it easy.